We're here today with Jason from Fairway Mortgage. And Jason, you do normal mortgages, but what about reverse mortgages? What are they?
Yeah, reverse mortgages are a really unique product for people 62 years or older. That is not only a great real estate tool, it's a great maybe tax planning tool or financial planning tool. The simplest way to think about a reverse mortgage is it's a mortgage that allows you to access the equity in your home, turn it into cash. There's two really distinct features about a reverse mortgage. When we say reverse, what we're hinting at is the idea that unlike a normal mortgage, when you borrow money, the day you borrow it, we amortize payments and you immediately start to pay it back. Mm-hmm. A reverse mortgage has no mandatory principal and interest repayments. So instead of a loan balance getting smaller over time, you can actually have a loan balance that just grows over time. And it grows against the equity in your home that's also growing at the same time. The other thing that a reverse mortgage is essentially is a line of credit. Mm-hmm. It's like opening up a borrowable amount of money on your home that you can access in a number of ways. You can have it pay you and supplement your income. You can take lump sum payments from it, and that line of credit grows over time as well. So it's a line of credit that gets bigger because your home's value is getting bigger. But probably the thing that interests you the most is not just what the reverse mortgage is and why it's such a great tool, but how it can be used in purchasing homes.
Agreed, yes. So for clients to refinance into a reverse will be super helpful for a population. But I think the majority of the people watching this and that we're going to interact with are going to say, how do I use this to purchase?
Yeah. So one of the things that a lot of people in retirement face, I know my parents did. I grew up in New Mexico. We had a 5-bedroom house, and then my brother and I ended up in Colorado. They wanted to relocate. To sell the big family home in New Mexico, I think they maybe sold it for upper 200s. But to relocate and buy a patio home in Longmont, where they wanted to end up, required them to take on a mortgage that another $100,000 beyond what they sold for.
Right.
And I think a lot of people want to move in their retirement years, but think that financially it's not going to be possible for them, and that's where a reverse mortgage can come in.
So let's play out a scenario. Let's say we have a family in your parents' scenario in Kentucky, and they're going to sell their house for $300,000. They're going to net $300 from their sale. It's a $350 house. They have a $50,000 mortgage still in place, and they're going to sell that. They've got $300,000 of cash that they can move here, but they're also leaving their jobs. They're in that retirement phase where their income is relatively fixed, yeah. Right? Yeah. And so they've got $300 in cash, a fixed income they can live on, but they can't really borrow a bunch. So we're going to go shopping for $300. We're not going to find a ton. We're stuck there.
Yeah.
Not a lot out there. How does the reverse mortgage help them purchase a nicer home near the grandkids?
Yeah. People in that situation kind of have three options. You have to look for a home that you can pay cash for. And that's the hard thing. You're not going to find a $300,000 home in northern Colorado. Or you take on a normal mortgage, but all of a sudden you're adding a financial burden monthly to your retirement years. So the way a reverse mortgage works is that there's a percentage of any home's value. So suppose it's a home you're going to buy. There's a percentage of that is borrowable funds. It'd be like a mortgage, a reverse mortgage. So if you bring $300,000 cash, let's suppose there's a property out there at $500,000, that $200,000 is the reverse mortgage portion. And because there's no mandatory principal and interest payments required, you could buy a $500,000 home with $300,000 down and never have to make a payment on it. The amount of that money that you can borrow is based upon really your age. So the closer you are to 62, it's a little bit smaller. If you're in your 70s or early 80s, that gets bigger and bigger and bigger.
That makes sense.
Yeah.
Okay. So you have a tool, right? A calculator that you can physically show people, hey, if you applied $200 of your $300,000 and you're at this age, here's how much you can purchase with no payment.
Yeah, we can run specific scenarios for people and look at all the different ways that they can use a reverse mortgage.
I love them. I know that 20 years ago in the marketplace, the reverse mortgage didn't have the best reputation. And that may have been it was sold as something that it really wasn't. So there's a possibility that the tool was fine even then, but it was sold as something different than it was in reality. I know that today there's a course that you take before you would obtain a reverse mortgage. You can meet with your financial advisor around how this mortgage tool works. And so there's a lot of opportunity for education before you step into one fully. And I think that education is well worth the time. I think the products are great, and I think they'll help people relocate when it seems difficult to relocate. Obtaining a new payment's difficult, and if you can get close to kids or close to family or farther away from family, I don't know your situation, and reduce your payments so that life's still affordable. I think this is a great way to go about that. So reach out to us. We'll plug you in with Jason. We can have these conversations about the market. We can pick out your dream house. We can send it to him. He can figure out what it won't cost you or will cost you to purchase it, and then you can make your own decision. So reach out. We'll plug you in.